Chart of the Week with Redmayne Bentley.
You're listening to financialradio.co.uk. My name's Giles McMullen, chatting with Bill Rook from Redmayne Bentley. He's our chartist that we speak to every week, and we'll be chatting through his chart selections today. Bill, a few things to look at. It's been a very interesting time in the markets over the last week or so. We've seen quite a bounce back in the S&P 500, which is what we're going to look at first. And really, this has pushed up other indices around the world. Well, what do you make of it now?
It's coming to a resistance zone, Giles, about 140 on this one. We're looking at the Spider contract here, which is the ETF of the underlying S&P. So 140 is,
and that equates to about 1400, doesn't it?
That's right. That's right. We've got to break through that level, and I've sort of zigzagged it across, so it looks like a long sort of bar thing. So we need to get through that level and to about 143, which would take us up through the 200-day moving average, which you can see is sort of like a brown line coming through that level. So if it breaks through that, I'll be very encouraged indeed. So resistance level, which we haven't broken through yet in the past. We had a couple of goes at the 130-odd level. We haven't gone through that yet. But a couple of pointers that are good. Directional movement is in its favour. And the volatility, VIX, is falling away. Volatility at the bottom there, if you can just notice that it's the trend of that is falling a bit, and there's more volume coming through. Very early signs that things are recovering. The new high-low to ratio is looking better. The inverse Fisher, which is the trend indicator I'm using here, is supporting some further strength here. So I'm looking for upside with support at around the 130-ish level.
So you don't think this is a bear market rally then?
It might be, but it's sort of very early to say. Some pointers have been that there have been a high advance to decline ratio, so that we've had some sort of days suggesting that this might be a bottom point. It's very early, very, very early to say, but it's looking very encouraging at the moment with world market rally coming through. A lot of the bad news may well be out the way. There might be further rate cuts from America. That's almost certain, I think, now. It's just a case of how much. So it's supporting a rally at the moment.
Okay, and so if it breaks through that resistance level, you would see it going up. I mean, would a strategy be, if you were nervous in these markets, to take out a long position or a short position? If you're an options trader, presumably you could do a straddle. You could go buy an out of the money put, an out of the money call, because I mean, presumably you would expect some volatility to return to these markets.
Possibly, depends on the yes. I mean, possibly. I mean, I don't like doing straddles and things. I'd rather have just one way or not. You see, and my preference at the moment would probably be to wait for a 143 break point if I'm not already in at the moment. The key really to being in the market is to pick quality and stick with quality, because quality will out anyway. But if you're going in for the first time around these levels, I'd probably wait for 143 to break through, or for the index to break through 143 or 1430, as you pointed out. So that sort of key level would be very, very important. To break above the 200-day moving average would certainly be welcome, I think, for the bulls.
Okay, Bill, that's the S&P 500, so looking reasonably positive on the S&P 500. Let's have a look at oil, light sweet crude. This has obviously advanced a lot, as we all know, in the last 6 months or so. It's been a little bit more volatile over the last couple of weeks, sort of flirting with the $105, $110 level. What do you make of it now?
Looking at this chart, the setup here looks further strength ahead, I think. This is a day or so behind. It's one day. I haven't got Friday's data on here, so it's just saying 101, but I think it's moving to 106, 107 level now. Looking for a break at 110. The trend is upwards, and this is mirrored by a gold price at the top there. You can see the gold price, which follows this very, very faithfully.
It does, doesn't it? It could almost be the same chart.
It could almost be, couldn't it? It's dipped recently, and I think that we'll see that go as well at a 1-for-10 ratio. So if this holds 107, I'd expect gold to go above 1,000 again. And in the middle chart there, I've put in the chart, the bottom chart against the US dollar. So you can see that the sort of weakness in the dollar sort of propels the oil price, which is sort of perverse when you think the Americans might be going into a recession state, when you've got then you've got a 30% increase in the underlying there against the dollar. So it's odd that this is the way at the moment, I think, moving towards gold.
So it's the weakness in the dollar that is supporting these prices. Do you expect that weakness to continue?
Yep, I do. Yeah, until the euro actually moves around, until the relationship between the euro changes, this is going to be the case. Yeah, the Europeans are very adamant they're going to stick to high rates because of the worry of inflation. The Americans have a mandate to cut, are more worried about growth. So that's the underlying tone we've set from the Fed, and that's the way they want to work it. Now, we looked at the chart a couple of weeks ago, didn't we, of the dollar index? We'll go back to that one very shortly, or next week or so, to see how that's going. And I expect further weakness in the dollar, and I expect commodities to go higher on the back of that.
So Bernanke's giving traders a blank check then, is that what you're saying?
Well, if you look at commodities, it is. This is the area to go for because they don't want to hold the dollar. The dollar's falling, so I'd rather have the money in commodities. And gold is certainly number one, and certainly platinum might be number two.
Yes, you mentioned platinum. We've got the chart up there now. It sort of reached heady heights a few weeks ago, didn't it? Now it's come back a bit. Presumably your prediction for platinum is the same as gold and oil, because it's obviously priced in dollars too.
It did. It shot up too far. I mean, but the signal was quite good there. I mean, the yellow at the bottom of the chart is indicative of the extremely high volume against the volume trend. So this is especially high volume on a strong volume trend. The green area is strong volume, so longer term volume. So it did tail off. It hit about 230. This particular contract, the ETF, hit 230 or 2,300, and came back rather abruptly, almost as fast as it went up. The stop was triggered, but it's bounced quite strongly. It's moving higher again. With the South African problems and the need for looking for a precious metal home for dollars, I think this is a winner. It also has the industrial use of catalytic converters, which I think are high on the menu with pollution at the forefront.
Right, so we've looked at an index, we've looked at a couple of commodities. Now we're going to look at an equity, Hardy Oil, Hardy Oil and Gas. What are you doing with this one?
Well, I like performance, as you know, Giles. This is the best performing share on a yearly basis against the oil and gas sector. It's about 48% up. And I like this. I like performance. Certainly in a bad market, this is performing very well. It's trending very nicely in all the indicators there. The B indicator is very high. The inverse Fisher is high. It's cruising nicely. It might be a bid situation above 868. I'm very interested in this share. It's sort of it's making discoveries. It's got a good balance between production and discovery, and it's and the volume's going in there. I like it. I just like the shape of it. It might be slightly extended. It was extended slightly too much recently. It's cooled off a bit, but certainly has got the attractions to be a winner.
Bill, thank you very much for your recommendations.
Pleasure.
This week. It's Bill Rook from Redmayne Bentley. We'll be chatting to Bill next week also, and the week after that, and the week after that. It's a weekly series looking at charts. Chart of the week from financialradio.co.uk. Bill, thank you very much.
Thanks, Giles.
Chart of the week with Redmayne Bentley.